BNP is one of those European banks that continues to be under a great deal of pressure. And if I could just summarize the results that we saw this morning, it was a weak fourth quarter, and as a result, they have had to cut their 2020 growth targets. Now, on Q4, specifically, group revenues were down 3.5% year on year. Net income held up slightly better, but overall, it was definitely a weak performance. Now, the main drag in Q4 was their corporate and institutional banking business, and within that, global markets was the real drag. Very weak performance from fixed income as well as equities. And in equities, they said that toward the end of the year, the conditions became increasingly challenging. In FIC, to your point about the ECB, they said once again, an unfavorable market context, but specifically pointed to low client business in rates and credit as a result of monetary policy, which keeping rates low. Now, as a result of this weakness in CIB, as I mentioned, they have now cut their 2020 growth targets, both on the revenue side and on the profitability side. Now, I had a chance to catch up with the CFO, Lars Machenil, for more detail around the challenges they faced in CIB and their decision to cut those medium-term targets. Listen in.
It is true that if you look at it, when I said that we confirm our ambition for 2020, it basically, if you look at our domestic markets and IFS, it's really on track with what it's delivering. However, on the CIB side, we do adapt a little bit. Why? Because it is indeed true that if you look at the overall fee evolution, the outlook is a tad more moderate than it was. And so that is why we step up, on one hand, the cost reduction. So we do another 350 million reduction in CIB, adding to the 500 million which is foreseen. So we will have 850 million cost reduction by 2020. Secondly, we also continue to focus on making sure that we divest from the non-profitable businesses. And thirdly, we continue to grow in such a way that we keep our risk-weighted assets stable. So yes, indeed, we bring in some adaptation towards our initial trajectory on CIB.
So it sounds like, looking at your updated 2020 targets, if I can just recap the highlights, revised downward your 2020 revenue target from 2.5% to 1.5% revenue growth over that 4-year period, raise your cost savings target, and you're planning to exit some of those CIB businesses that aren't profitable. All of this together sounds a bit like risk mitigation, but it's not clear what your strategy is for CIB.
Yeah, if you look overall, as what I said, our overall ambition ramping up to 2020 is unchanged. So we want to make sure to have a diversified approach towards the client and do this in a much more digital way than in the past. So if you look at CIB, for example, yes, we have markets in CIB. We also have corporate banking in CIB and security services in CIB. And that is the total offering that we have, and we step up our digitalization in it. And that activity is then combined with what we do in the retail with respect to retail clients, but also within retail clients, which are business owners and the likes. So that is our overall strategy, which is unchanged. We really want to provide this diversified offering. We want to continue and really step up digitalization and even step up further our cost reduction.
Now, the market was fully expecting CIB to be weak in Q4, so thematically, no surprise there. And they were hoping for further cost-cutting measures, which, again, we did see come through. On the bright side, we did see capital actually come through better than the market had been expecting. They managed to increase their core Tier 1 capital ratio by 10 basis points to 11.8%. So I would say that is the key positive in today's results. But Karen, to your initial point about consolidation, this is a bank that has just cut their revenue and profitability forecast for 2020. They are clearly under pressure. They're clearly struggling to drive that top line growth. And at the moment, M&A seems to be off the agenda, but the question will remain whether it becomes necessary to consider it more seriously.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.